Good evening, everyone. This is That Crypto at That Channel, and I'm here with Avet.
Hey everybody.
He's going to be helping me discovering the topic of the economics of Bitcoin and if it makes sense to invest and what are the risks. But before that, I have an announcement at that channel tomorrow. Tomorrow is the 9/11, the anniversary of the attacks on the World Trade Center. And that channel will be screening a film to commemorate the event. The name of the film is Woodstock Forever, Peace, Love and Hope. So tomorrow, 7 p.m. at that channel, $10 pay at the door. And we can continue. And we have like a very nice crowd here. So do you guys know what Bitcoin is? More or less.
Just say yes or no.
Yeah.
Cool. I see somebody's like, hey, I do know, but I won't tell that a lot.
Chris, do we have a mic?
Sure.
So guys, if you have questions or comments, just grab the mic and speak in. Awesome. So today we're going to be talking about economics of Bitcoin. What is the value of Bitcoin? Because there are a lot of opinions that Bitcoin is a scam, has no value, burning lots of electricity and fossil fuels, adding to the global warming and so on. So let's try to figure out what it is. So first of all, I wanted to remind you what are the functions of money. Why do we have it? So the money usually has three functions. Store of value, meaning that if you exchange something for money today or you get paid, you want to be sure that in time, a year from now, this money will keep its value. It's not gonna deflate. So if it does, it's not really good money. So technically anything can be money. Whatever you don't want to consume, you can use as money. So you can convert something in milk, you can use milk as money, except for milk doesn't stay
long enough,
fresh long enough, so maybe not a good idea. So medium of exchange is something that you exchange before you buy something else. So otherwise we would have to barter. Barter is not really convenient. So that's why we use money as an intermediary. So useful thing. In unit of account, this is how we measure value through prices. And well, Bitcoin right now may be a store of value. very rarely medium of exchange, but no one uses Bitcoin as a unit of account. You don't see pricing in Bitcoin today.
Oh, I have seen on Microsoft website. It used to be
Usually they have the pricing in US
USD.
dollars, and then at the moment they convert it in Bitcoin. They don't even keep Bitcoin. They use the whatever, BitGo, BitPay, whatever it is, and they get paid in US dollars right away. So now, what is investments? According to Investopedia, investing is the act of allocating funds to an asset or committing capital to an endeavor such as a business, project, real estate, with the expectation of generating an income or profit. So basically, investment is an act to protect your savings. And investment has an expectation of income, such as dividends, if you are buying shares in a company, or price appreciation. Usually this part is considered speculation, but technically there's not a lot of difference between speculation and investing. Well, Bitcoin is definitely, it doesn't have the income flow, so it's only price appreciation of Bitcoin. And another thing is it's to protect your savings. So if you don't really have savings, so you shouldn't be thinking about investing. So that's something that you already have, and you think how to protect your savings, then you look for the vehicles to invest in. Everything's clear? Cool. So then I took a look at what types of investment, or actually cash is not really an investment, but how you can store your savings. So they go from the lowest risk to the highest risk. So the cash obviously is the lowest risk, is money. You can exchange cash for anything else pretty easily. Government bonds as the highest security, and usually when the risk is low, the sorry guys. So the risk is low, and reward is also low. The higher the risks, the higher the reward or return on investment. So the next, you can invest in stocks, then in real estate, everyone knows, commodities such as gold, oil, like grain, if you're an expert, maybe copper. And we also have derivatives. So, but technically I'm looking at bonds, stocks, real estate, and commodities. Nothing else you can invest in. Well, sometimes you can invest in collectibles such as paintings, but that's not very common. So just keep all these things in mind. So we'll combine everything later on in the presentation. So and I want to mention the central banks and their role in the global economy. So central banks, they changed the monetary policy to smooth out the business cycles. That was the idea of Keynesian economics. So central banks, by their own decisions, can change the money supply in the economy, thus stimulating the economy or bootstrapping the economy. So before the World War I, Europe had the gold standard, so basically the central banks couldn't easily issue money. But to finance the World War I, a lot of banknotes were issued and initiating the inflation. So after the World War I, we can say the gold standard was dead, and we entered the era of fiat money, where central banks can issue or print money virtually unlimited. So central banks change interest rate. The lower the interest rate, the more people borrow money. And actually, when you borrow money, the new money is created. That's kind of, actually, it's a genius idea. So the money supply is decided by the
community.
Demand. Actually, probably a good idea, but it didn't turn out really good. So commercial banks, at least in England, I know this number is from England. Maybe in the US it's a different number. In Canada, they issue 97% of money. It's not even the central bank. So when every time you get a loan at a commercial bank, they issue this new money. So you, by borrowing the money, you create new money in the economy. And right now it's 97% of this money. It means if you hold cash in your pocket, someone is most likely is paying interest on that. At least 97% of that cash is someone is paying interest on that stuff. So as I mentioned, supply of fiat money is virtually unlimited. And if the governments don't restrain themselves, like for example, like in Venezuela, we can enter an era of hyperinflation, or just first inflation, then hyperinflation. But by decreasing the interest rate, so the central bank stimulates borrowing, and when consumers borrow, well, the logic is that they're going to be spending, and this will stimulate growth of the economy. That's the basic idea behind this money creation by lending. And what it actually does, because the money supply is always inflating, so if you want to keep your savings in the fiat money, so with time the value of your money will be diluted because of just sheer supply. So the volume of money is always expanding. So that's why you better be looking for some sort of investment vehicles. That's why no one's keeping money in their bank accounts. And that leads to high time preference. The high time preference, that's one I read from the Saifedean Ammous book, the Bitcoin Standard. So he's talking about it's how much you value the present moment in comparison to the future. The future comes always at a discount because it may never arrive. So you just don't know if you're going to be alive tomorrow. So you always value the present moment more than the future, but how much more you value the present moment. So during the gold standard, you could be sure that your savings in gold will stay the same, because the inflation of gold is only, as we talked, is about 1.5%. So 1.5% of new gold supply is generated every year in comparison to the entire stock.
So if suddenly somebody came with trillions and trillions of USD and say, hey, I want to buy enormous amount of gold, what you're saying is we just cannot supply it. We just have not enough gold, and we cannot go and mine that gold in enough amount.
Yes, we can. So the price of gold will go up.
Cool.
And when the price of gold goes up, for miners it makes economical sense to extract more expensive gold.
And what's current ratio, like 1,400 on the price versus 1,300 for mining, kind of?
I don't know what's the return on what's the profit margins for gold, but I guess it depends on what kind of mine you have. But some gold is much more expensive to extract. That's why at this prices it doesn't make sense for companies to mine more gold. However, if the price goes up, so
that would make sense.
We can extract more gold from the deep underground. So the diameter of the Earth is 12,000 kilometers.
More than enough to dig enough.
I think the biggest hole, actually the mine that
11 kilometers.
well, the deepest hole, but we don't mine
We don't
anything.
mine
we
the-
just try it as deep as we can. But I think the deepest mine is something around 3 kilometers or something.
Mine.
So if it's much more the gold much more expensive, then we can dig deeper and deeper, and like we have 12,000 kilometers to dig. Yeah, and about the high time preference. So if you have high time preference, you prefer to spend money right now and even borrow money and spend.
Yeah, otherwise,
Right now.
who
So
knows
you-
what's going to
you-
happen tomorrow,
You don't
right?
really want to save, because you know actually that your savings will lose value with time. That's why it doesn't really make sense. When if during the gold standard you wouldn't lose your value with time, but
But not now.
not right now. So and this chart I found on Bloomberg. So there is a correlation of the white thing is global money supply, and the yellow graph is S&P 500, basically a stock index. So what you can see here is that supply of money goes into the stock market. So even though we don't feel inflation or like big inflation and consumer products right now, it's because the entire money supply goes into stock market and real estate. So you probably know that at least in Toronto, the real estate prices went doubled almost like in the last 5 something years. So yeah, this is why you probably want to be looking at something to invest in. So why you want to be looking at something to invest in? Also, like because there are lots of talks probably if you watch TV news, if you read the internet, there are a lot of talks that we are getting closer and closer to the next recession. So the interest rates of most central banks are 0 or negative, like in Japan or Europe. And right here, this is the debt in comparison to GDP. It's the US debt to GDP ratio. So in the 70s, the debt to GDP was around 30%, and right now it's over 100. Like actually, this ends at 2016, but this year it's more than 100% debt to GDP ratio. So and someone will have to pay this debt.
And who is that someone?
So there are two ways. Well, first the governments need to pay at least the interest, and right now, and the government has 2 ways to pay the interest: is by collecting taxes,
What they do?
or by borrowing more money
From whom?
from foreign governments or foreign individuals or domestically, or from the Federal Reserve.
What they actually happen?
Basically, Federal Reserve can issue as much money as they want, and they can buy the government bonds. So the foreign governments, I think they already ran out of US dollars to borrow to the United States. So basically, the only things that's, well, if they try to increase taxes, so they might shrink the economy,
Absolutely.
because companies will be getting less profits, and some businesses might not be economical to pursue. So sometimes it's not a good idea to just increase taxes without thinking. So then the only way that they can use is just print money and pay for the interest. But if you use this a lot, which they were doing in the past, you can create a situation of inflation. The United States is actually in a very unique position, and actually that's good for them, because the US dollar is the global reserve currency, so the stock of US dollars is pretty huge. Every central bank in the world keeps the US dollars in their reserves, and that's why even they print a lot of
They still save kind
new
of.
money. So that's the inflation or the creation of new money is around 5% per year. So in Canada creates 14%. So, and these are the developed countries that between 5 and 15%. Developing countries, they create even more money. So yeah, this is where we are going. Doesn't really look good. Yeah, and the situation is the same, and well, actually, the global debt is even worse than that. Global debt is something around 300% of global GDP. So what else can trigger the recession or the signs of recession, oncoming recession? The U.S.-China trade war, negative interest rates, as I already mentioned, all over the world, negative yield bonds. That means when, well, right now we are at, well, at least that was last week, that was $17 trillion of bonds. These are the safest assets or safest investment that you can have. They would bring negative yields, which means when you lend money to your government, 10 years later you will receive less. So you're basically paying to the government to take your money. It doesn't make a lot of sense. We also, well, the stock buybacks is actually one of the problems that's the beautiful idea of Keynesian economics, of creating money when it's necessary. So the companies that have access to easy money, they have collateral and they can borrow money that's create new supply of money. So that what they were doing, they would borrow money at low interest rate and they would buy their own stocks, pumping up their own stocks in stock market without creating any economic value. So this way we have inflating money supply and little economic growth. Yeah, and by the way, so I read this a couple of weeks ago. Warren Buffett's fund, the Berkshire Hathaway, keeps 122 billion in cash, which means that the Buffett expects the economy to collapse to a certain degree, or at least to turn into recession, which also means that the stock market will go down, and with this amount of cash he could buy
it out.
Buy stocks at much lower prices.
Oh, we came closer.
Yeah, so now what is Bitcoin in this entire situation in comparison to other forms of investment? So in the investment, as I said, the bonds, if you decide to invest in bonds, now we have negative yielding. Stock markets, as I said, Warren Buffett expects it to
go down.
So probably you don't really want to invest in the stock market right now. Then we have real estate, which is similar to stock market, is at the peak right now, and it might go down following the stock market. And then we have commodities, which is gold. Gold has been always the hedge against everything, sort of uncorrelated asset during the economic crisis. Oil, but I don't know if you. But now I'm gonna explain why you don't really want to invest in something that's supply of which can be easily increased as
Because inflation. Because somebody just can print another billion of whatever.
Yeah, like let's say if you decide to keep your wealth in oil, and you buy all the oil that's on the market and you pump up the price, you double the price, and then.
But what next you're gonna do with the oil? They're gonna sell it.
Then the producers of oil, they see the price goes up, so they increase the production, and then it pushes down the price of oil, and then now you keep your own oil. You bought it at the higher prices, the price is lower, and when you try to sell it on the market,
It goes
the
down.
price will go down, so it will lose the value. So what about Bitcoin? So Bitcoin has the limited supply, and it has increasing supply, well, actually decreasing supply schedule, and then it's gonna stop at 21 million. Now we have
18.
close to 18 million, yeah. So, and 21 million will be in 2140, something like that, 100 years from now, basically. So that's right now the inflation of Bitcoin is around 4%, and in May 2020 the inflation will drop to less than 2%. So we will be close to that of the inflation of gold. So Bitcoin is an uncorrelated asset, which means it doesn't.
One sec, you said that it's impossible to increase the amount of Bitcoin. Let's say just 12 Bitcoin per whatever's. Nobody can suddenly mine 10,000 Bitcoin in a second.
Yeah, so the genius of Satoshi Nakamoto that created Bitcoin, so how Bitcoin is actually, new Bitcoins are mined or minted. So the miners, they run the computations to find a solution for some cryptographic problem, and whoever finds the solution gets to
Reward.
finalize the block and gets paid as which is called the block subsidy, and it's 12.5 Bitcoins at the moment.
At the moment.
Yeah, in next May it's gonna be half of that, which is 625. So, but the miners have costs, which is electricity. They spend a lot of electricity and they have to pay for the electricity. So that's why if it's much more expensive to mine Bitcoin than the price of Bitcoin, the miners will shut down their operations waiting for the price to rise. However, if the price of Bitcoin goes up, so the more miners will join the network.
But still, they cannot. Each new block should arrive in a network just
Yeah, so yeah.
10 minutes.
So the more hash computing power would solve the cryptographic problem faster, but the network
Will
protocol
adjust itself,
adjusts itself, so the Bitcoin blocks are generated every 10 minutes only. Doesn't matter what the price of Bitcoin, the higher the Bitcoin price, the more miners join the network, but the supply of Bitcoin stays the same.
So it's beautiful. So, and we cannot even force that. Whatever we do, it's unforceable. It is what it is.
It doesn't matter what the price of Bitcoin is, the supply is not going to increase. It doesn't matter if only 5 people are using Bitcoin right now or 5 billion people, the supply is going to stay the same. So the higher the price, more miners join the network, and this will secure the network on its own.
So probably first time in mankind we are getting asset that actually independent from human will. Whatever we want, we cannot break it. We want more, but algorithms say, nope, you cannot. It is what it is, whatever you try.
That's correct.
That's interesting.
First time in history.
Yeah.
And it's digital.
And it's
which is
digital.
even more.
And we cannot even go deep in Mother Earth to mine it. Interesting.
No. Okay, what
So,
else? What else good about Bitcoin, and why you should be thinking about it?
So just let's make sure that audience understood that we cannot enforce Bitcoin to get more than it's supposed to get due to algorithm. It is value that can be changed. So this is number one for Bitcoin. Okay?
So yeah, the difference, if you invest in anything, the supply of this anything can be increased. Well, probably not collectibles, but this is like they're one of a kind.
Yes.
But everything else, the supply of it can be increased when the price goes up. The supply of Bitcoin cannot be increased no matter what. So that's one important distinction of Bitcoin
And everything
in
else.
comparison to everything else. So it's also uncorrelated asset. The price of Bitcoin doesn't really move with anything else. Maybe gold. I have seen that it's a little bit correlated with gold, but gold on its own is not
It's a unit.
is uncorrelated asset.
Yeah.
So it's a hedge against everything. It's also the asset with asymmetric return, which means that there are risks with investing in Bitcoin.
True.
And if you're wrong, you can lose your investment. But
Beautiful.
if you're wrong, you are wrong small. But if you're right, you're right big. So like if you Bitcoin can go up 10 or 100-fold probably.
And again, why we are not speaking that Bitcoin can go down? Like, why? Because it logically comes from the number one. The supply of Bitcoin, the speed of supplying Bitcoin can be changed. It is what it is. Hence, and the time grows, more people should know about Bitcoin, more people get involved with the Bitcoin, and just the fact that more people touch Bitcoin, and the fact that we cannot increase the speed of supplying it, will force the price of Bitcoin to grow.
Not only people, institutions. Institutions are not even here yet. So
Yeah.
only like a tiny fractions of them. Because the infrastructure and regulations are not here. Like they
But
almost,
when it is,
almost, yeah. When they can buy, so you can imagine how much money is going to be flowing into Bitcoin, but the supply of Bitcoin is still the
won't
same.
be changing. Yeah, indeed.
Another positive good thing for Bitcoin is that the position of US dollars as a global reserve currency is actually weakening at the moment. So that China is, well, because of the trade war, China doesn't really want to use US dollars as the currency, because the United States uses the dollar as a weapon. So it can impose sanctions on countries such as Iran, and then Iran cannot trade because all the trade right now is done in US dollars.
Yeah.
However, some countries, especially that don't have good relationship with the United States, such as China, Russia, Iran, Turkey, and India, that moving away from trading in US dollars. So, which also means that the reserves of the stock of the US dollars
And look
is
at
shrinking.
that. Absolutely. And look at that historically. We should understand when US dollars became reserve money. It happens in the 20th century after two big wars, and during that two world wars, the economy that less get traumatized was US economy. They can produce more goods and services than anybody else in the world. That's why the currency behind that very strong economy became reasonable. If you have US dollars, you can buy product of.
Actually, at that time, there was a Bretton Woods agreement, and all the countries shipped gold to the United States, and the United States was on a gold standard because they were afraid that the Soviet can
grab
capture
it.
the gold from Europe. So the United States was keeping the world's gold reserves, and the agreement was that the United States will be printing dollars that are backed by gold,
And what happened
and
next?
all the other countries will keep US dollars in their reserves. So that was the first agreement, but then United States got off the gold standard, and in 1971 there was no connection to gold. However, the United States had an agreement with Saudi Arabia that
Trade against
that
oil.
all oil trades will be made in US dollars. So that's how. Well, and then also it's the strongest economy. That's true.
Here, what you see, there is no country in the world they can do the same tricks against Bitcoin.
No.
No.
Well, but what's happening right now? So the countries started to get off the US dollar standard as a reserve currency. So the Russia is shrinking its US dollar reserves, increasing gold reserves. China's the same thing, and we kind of see this trend all over the world. So which means the stock of US dollars is shrinking, the debt of USA is growing, so the United States have to pay more and more interest, which means they will be printing more money than increasing the supply. So because of the shrinking stock, the inflation, the supply of US dollars will be much higher than 5%, which eventually will lead, unless they do something about it, will lead to high inflation.
I'm thinking as any private person, why would I go with decisions of country which might be completely different? They can do whatever, they can technically do almost whatever they want, and me myself as a private citizen, I have almost no control on what they're gonna do.
Well, first of all, that's network effect. So everyone is accepting US dollars because this is the tradition. This is how
It is.
happened. Yeah, and the banking system, if you wire money, the SWIFT.
It goes through US.
Yeah, so it goes like you can send US dollars. If you want to send Russian rubles, I don't
It
really
will
know
convert it.
what you need to use. So
Double conversion, I can tell.
yeah, so that's probably the case.
Yeah.
Another positive thing for Bitcoin is called the Lindy effect. That's the rule that the longer something existed, the higher the chances it will continue to exist. So, and Bitcoin stayed here for over 10 years now, longer than any other cryptocurrencies, and it continues to grow, and probably the chances are higher and higher with every day that Bitcoin will continue to exist. And the network effect, well, that's almost like with the US dollars that we were talking about, that everyone is accepting Bitcoin. But if you're thinking about other cryptocurrencies, they can be niche. Some people might accept, some people might not accept, and especially if you look at what's happening right now, it's the crypto market. The Bitcoin dominance, which means the value of Bitcoin market cap in comparison to entire crypto market cap is getting higher. I think it was like
70.
below 40% about a year and a half ago, and
now
it went above 70% right now. So Bitcoin is sucking up value from all the altcoins.
Also, let's mention that the fact lots of cryptocurrencies were made for very specific needs. It's like utility mostly. Utility token, but not currency. And probably the only crypto asset that been created as a currency was the Bitcoin. It was the first and actually the best one, because after that it was Litecoin, whatever's, but that was only the second. And the most of crypto assets is just a utility token for some platform that intensifies use that platform, and that's all about. That's a big difference between Bitcoin and most of the rest, let's say.
Well, okay, actually, there are a lot of projects that can present themselves as the new form of money, and they don't have, like Litecoin, for example. It's just money. It's
just
faster.
money.
It's kind of faster Bitcoin.
It's faster, smaller Bitcoin, true.
And Bitcoin might not be the best, but it's good enough to be adopted by everyone else. And if you want to go from fiat into crypto, if you want to buy any crypto at all,
You should go through Bitcoin.
First, you're gonna buy Bitcoin. That's how it works.
That's a gateway to crypto world.
Yeah. So that's the network effect, and it's this where it was coming from. I think it was someone was comparing with fax machines. If you only have one fax machine, it's not useful. So two, maybe. But if you have the entire city using fax machines, then all of a sudden it has a lot of value. So same thing with Bitcoin. So anyone in crypto would accept Bitcoin. Not anyone would accept anything else.
That's true. And indeed, right now, anyone in crypto space do accept Bitcoin.
And the most development of the code is done on Bitcoin, and the less bugs are found in Bitcoin. So it's probably the simplest cryptocurrency because it's dangerous to introduce new features because there's a possibility of introducing new bugs. And even after 10 years, like last year, there was a bug found in the Bitcoin code that would allow for extra inflation by miners.
But still,
No one used it, but even after, I mean, this is what I'm saying, even after 10 years when a lot of people were looking at the code and no one noticed this bug. And the bug was there for several years, like 3 or 4. And all the other cryptocurrencies,
they have a bug any other day.
Yeah. So they might not be really safe. Okay, so let's talk about the risks of Bitcoin. So this was the
Pros.
we'll talk about the pros now. What are the risks of Bitcoin? First of all, as I already mentioned, it's an experimental technology and the bugs can be found and we don't really know what might happen. So something might happen which we cannot really conceive of. So yeah, there is an technological risks. Also the government-sponsored attacks. And we were comparing the US dollar with the hard money. Bitcoin is a hard money.
Bitcoin is a hard money, yeah.
US dollar is easy money. It's easy to print. It's easy
still
in comparison to anything.
No.
So you
Gold
doesn't require anything from the Fed to increase the supply of money.
for them, true.
And because the United States has the dominance, the global dominance in the finance and like a banking system and the military, so they might not want
The dominance of
people
something else.
switching to something else, which is Bitcoin.
Again, might, right? Might. Probably. We don't know.
Well, we're talking about the possible risks.
Yeah.
That's what I'm saying. So I looked at it and it seems pretty feasible to me.
But as we say, government, they actually, how many government even can afford themselves to have 51 attack?
Well,
Not too many.
A lot of governments, because they can print money. The money is free for them. So
money is free, though they need to buy electricity if they can produce it. Then they need to buy devices.
the only country that makes sense for which makes sense to do the 51% regulatory attacks, any country can do that, and we see it, like we see in India, China, and
they do all the time.
United States. But it's only for the United States it makes sense to run the 51% attack, because the United States dollar is the global currency. And I actually was thinking about it. So why not China? China doesn't want US dollar as a global currency. So actually they would be protecting Bitcoin if the United States would try to attack it. So
technically they do, because the most of the mining power sits in China.
But it's not government supported.
It's not government support. We don't know.
So I would say that China would want the US dollar to lose their dominance.
Yeah, we are now making some speculations. Let's look for forks.
I wanted to mention, so we were talking about if I want to send money across the globe, so I have to use the Federal Reserve Central Bank, like any central bank. So all the money goes through central banks if I want to move between countries cross border. And before 2009, there was no other alternative. Right now, with Bitcoin, we can send money, not using central banks. So yeah,
we can just send peer to peer.
Yeah.
Cool. Peer.
So forks and altcoins as inflation. So yeah, there was a risk, and sometimes you can hear this argument that Bitcoin is not limited. So you can create a fork, or you can copy the code that costs nothing, and then all of a sudden you have
another
42 million of Bitcoins instead of 21.
We don't have Bitcoin, because Bitcoin is not only a piece of code, it's the whole community that already have built around it.
Yes, it's not just a code, it's also a social contract. It's what we believe Bitcoin is. Because as I was talking about it, the Bitcoin has a testnet, and testnet tests the new features of Bitcoin. And the testnet is identical to Bitcoin. The code is the same, and the testnet has the same Bitcoins on the testnet. but they
But who's gonna accept test Bitcoin? Bitcoin test? I don't think so. Nobody gonna
but
sell
it's actually it's
pizza for that.
identical copy of Bitcoin, but it doesn't have value because there is no social contract about it.
Yep.
And why Bitcoin is different from all
You
the
know,
other forks and altcoins.
Just one thing that I want to mention to our auditory. When we say absolute identical, to build a blockchain you need to have Genesis code, Genesis phrase, and that what makes difference between test network and not and production network. So it is identical from all the perspective except Genesis. Okay, so anybody in a real Bitcoin network knows that this is real Bitcoins, and if suddenly by any magic chance there is a test Bitcoin appears there, it would be rejected because the whole network knows about Genesis phrase. Okay, so just give some technological understanding. They are same, but there's absolute big difference in their DNA. So let's move forward.
Well, it's a different blockchain.
It's a different blockchain.
I mean, different chain. Yeah, we're talking about forks and altcoins that may, the argument is they dilute the value of Bitcoin, and basically they're like a fiat money. You can print more and more these altcoins and forks.
As much as I want.
But the difference is that no one controls the Bitcoin. There's the founder disappeared. There's no central authority that can change the Bitcoin code, especially the supply. But with all these forks and all the altcoins, there's someone who decided that we're gonna fork, and like Bitcoin Cash, for example, they have hard forks, which means the changing in the code that's not compatible with the previous version. Every 6 months or so. So the same thing goes to altcoins. Basically, you may think of it as a form of printing money for yourself.
Yeah, we suppose that are going to produce some goods for that. However, here in 2019 we can say that Bitcoin proves that is as strong as 70%, that altcoins are cool to be in a space, and probably it's very cool from lots of perspectives. The store of value it's indeed Bitcoin, and altcoins, actually that was proved by our up until now, and altcoins cannot compromise it.
Yeah, so basically in 2017, at the time of forks, when there were like a lot of Bitcoin forks, Bitcoin Gold, Bitcoin Cash, Diamond and whatnot, so at that time Bitcoin dominance fell below 40%.
That was the only time?
And now, I'm not sure, but I checked at that
I guess,
time.
Yeah, that's what I remember
at
as
that
well.
time that fell. But yeah, before that there was nothing on the market. Bitcoin was like close to 100%. But anyways, so yeah, there was a risk, but right now the risk is lower because Bitcoin proved itself that now Bitcoin dominance going up. So obviously people don't believe in this extra forks and altcoins. So volatility is the risk. So yeah, this is the risk if you have high time preference, if you want to spend your money within a couple of days, months probably, you are open to the volatility risk. Bitcoin market cap is really small in comparison to any other assets, so it's close to 200 billion right now.
It's open to manipulation.
And it's very easy to manipulate Bitcoin. So any institution or any investor with
enough money,
few $1 million can move the price.
Millions probably not already, but $1 billion was more than enough, I would say.
No, millions. So
millions yet.
Because not the entire supply of Bitcoin is traded on the market.
That's also true.
Most of Bitcoin, like
lots of Bitcoin get lost.
3 or 4 million Bitcoins are lost already. Then a lot of Bitcoins just sitting, people
somewhere,
holding somewhere, and only like maybe if 25% of all Bitcoin is traded, that's probably good. So you don't really need a lot of
money to influence
to significantly move the price. So yeah, that's why it's and also the entire market grew from the bottom up. So these are retail investors. So institutions are not there. That's the first time the market was built
By
from the bottom up, and this is also proves that the Bitcoin didn't have any value in the very beginning, but the market decided that it has value, and right
Yeah.
now the market decided that
the value is
the value
that.
is $10,000 all of a sudden for one Bitcoin.
Oh, interesting comparison. One pizza was 10,000 Bitcoin, and now one Bitcoin $10,000.
Wow. Yeah. I think he bought two pizzas actually.
Two pizzas actually. Yeah.
So
Private key.
private key man, and another significant problem, and this risk is so high that you might decide not to invest in Bitcoin at all. So the private key management is basically it's your password or recovery seed phrase, or your private key that the
How
key
you
that
prove.
allows you to spend your Bitcoin.
Spend or send. I mean, to transfer Bitcoin, you need to prove transaction by your own private key.
So it's impossible to recover, like an email password. There's no way to recover it whatsoever. And another risk is if someone else gets your private key, they can spend your Bitcoin. So that's a very high risk. So you just need to be very diligent with this particular situation.
But that's doable. I don't feel it. It sounds like private key management. You need to deal with your own private key. You need to have your own due diligence. There is nobody that can help you with recovery. Still, why we are looking on the humans like that? They can. I believe they can. Why not? It yes, it should be. We should show. We should teach them. It probably have some learner curve, but that's doable.
Like 4 million Bitcoins are lost. It's like
That's true.
25% of all supply already is lost. So
Most of the times when people have like they mined something in 2009, yeah, that something doesn't matter, so let's format my HDD because I need for something else. That's normal.
yeah, well, everything is doable. It's just you need to understand what you're dealing with and what the risks are.
Absolutely, absolutely. And private key management. The word private means you yourself, please yourself, manage your keys. Because exchanges also can manage the keys for you and suddenly disappear from market. That's
well,
long story.
in this particular case, it's from the pair of private and public keys. So,
Yeah. Inheritance.
and this is actually connected to the private key management is inheritance planning. So if how you're gonna pass on your Bitcoin to your children.
Well, inheritance. Why not even? Yeah, you should plan for that. Big question.
So this risks are really high. So it's unless you actually are very serious about it and think about it and learn about it.
Let's say this. Why I'm not too serious about $10,000? Why suddenly I'm taking $10,000 as a joke? Why I'm not serious enough? Just because it's digital? Well, it's psychological thing. I guess we can change it.
Well, maybe it's not a lot of money for you.
For me,
That's why
dear
you're not
audience,
serious. Yeah.
2,000K is a lot of money for me, and I believe for most of you as well.
No, it's actually it's a different paradigm. So it has never
Yeah.
happened before in the history of humanity. We don't really understand. Whenever we deal with money, we deal with banks, and the banks are responsible for the security
everything.
and safety. And if you lose your PIN code, you can always call the bank and they will recover.
Nothing to say
This
about
is different.
inheritance. Inheritance, you just grab a paper, write, me myself, I give 100% of whatever to person blah.
This would conflict with your private key management. So you don't want anyone to see your private keys, because if anyone sees your keys, they can steal your Bitcoin, and you don't really want that to happen until you die, and then you want only your children to find your private key.
And when that bad stuff happened, you want to make sure that your kids can use it, can leverage it. So yeah, that's questions. That's questions, of course.
So yeah, this is the risk. Yeah, and let's talk about the Bitcoin price models. So I found two models so far. And there's, well, first of all, Saifeddin Ammous and the Bitcoin standard is talking about stock to flow ratio and how we choose money organically, why we ended with gold, because the supply of gold is very low. First of all, the gold doesn't rot or deteriorate. We have the entire supply of gold that we dug out of the ground in the last 10,000 years. It's still
It's
there.
still there.
So, which means that we can't really increase the inflation of gold by a lot. So, and right now it's around 1.6%. The silver, the inflation is 4.5,
Due to same reasons.
close to Bitcoin. Platinum, which is a rare.
It's a bit extraordinary, I guess.
Well, the stock is low. So the platinum is used in
Lots of
industrial
industries,
cases. So every year the supply of platinum exceeds the stock of platinum. So that's why we can easily increase the supply. And if you decide to store your wealth in platinum, you'll
I would say,
just lose it.
let's understand something. Platinum is a very technological. It's not how that happened that platinum is been used in lots of technologies a lot, more than in anything else. Vice versa to gold and silver. Platinum is a catalysator, it's a catalyst. It do lots of stuff in our phones, electric supplies, way much more than gold and silver. So it's unique in certain case. So that's why 200%, which makes lots of sense for it.
So you don't want to keep your wealth in platinum. That's the point. So, and what's there's this guy, well, online it's called the Plan B, or his Twitter handle and Medium, that's from his Medium actually. It's 100 trillion USD. So he analyzed the stock to flow ratio and correlated it with price. And he plotted this. This is an logarithmic chart. So he plotted the Bitcoin price
If
in
people
comparison to supply of Bitcoin.
just
And
give
what
people
he
idea.
found out, so first of all, the correlation is pretty strong. But what he also found out that the silver and gold are on the same graph. So yeah, and by his prediction, and according to his theory and the model, the price of Bitcoin after the next halving in May 2020 should be $55,000. And this is just historical chart of
Bitcoin life.
returns of hodling. Yeah, how much historically, if you hold Bitcoin for 7 days, you would get 1% return. 51 days would get you 10% on average. 50% in 5 months. 8 months would give you 100%. And 4.5 years would give you 100x.
Let's think about that. Beginning of 2019. How much Bitcoin was? 3000k. Right now it's 10. We can say it was very bottom, now we can say we are a bit of up, but yeah, the graph and the reality is actually match. Absolute match.
These are the average numbers. You can be down.
Absolutely. Average means
in-
average.
And we are at the end. So remember to back up your seed phrase. This is your private key, and remember not to show it to anyone. Never keep your coins on exchanges. That's the same thing of private key management. It's difficult to understand. And do you have questions, guys?
Just to make sure, guys, word keep doesn't mean do not trade. Trade on exchange if you want. Just make sure don't keep it. Exchange is not where you keep your money. Exchange is the place where you trade it. Feel the difference?
Yeah, there are lots of risks. So
Let's ask our audience what they think about Bitcoin and why they need it. Why you guys need Bitcoin? if you do need. I guess not only offline but online audience might ask the same question.
Yeah, let's.
Why they need Bitcoin?
Let me check if we have. Ralph, what do you think about Bitcoin?
About what? Because I'm having trouble hearing. Pardon?
What do you think about Bitcoin? Why do you need it? Or like, do you think it's a good investment?
Oh, I think it's a terrific investment because I got into a couple of programs where they're trading it, and I went to 4 different programs, but they made different coins, but they all start. Oh, just a minute, I should answer on this. I think Bitcoin is very good to trade, but the interesting thing is there are a lot of other coins coming on that are represent companies that are earning income in different ways. And the funny thing is they have their own coins, but they're all using Bitcoin as the entry point.
Absolutely.
So it is a very strong coin.
Yeah.
Yes, it's the most liquid, the most tradable.
Okay. I guess we can roll out stuff.
So do you guys have questions?
If no, that's.
If not, then let's wrap up and we can do the unofficial part.
Thank you, everybody, online, offline, over there, over here. Thank you.